Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, October 7th, 2020. Uh, been looking for something to report today, and there's just not a whole lot. I put out a chart of the NASDAQ 100 this morning. Let's just keep it simple. This is our trading range recently, and the MO is to, be long at the bottom of the range, short at the top. If you're an active trader, or next big buy signal, if it breaks to the upside and you're bullish and you think the market's going to new highs. Now that breakout, as I warned, will be a bit suspect because you'll have, if it happens anytime soon, you'll have negative divergence. So we already had one little whipsaw there. So again, you want to look for something impulsive. Ideally, you want to see these divergences no longer in place if that does happen. And like I said, there's just a clear pattern recently of the NASDAQ 100 bouncing between that range, and more importantly, top of the range, not just this recent trading range here with that defined bottom, but that 11,550-ish, again, being where every rally attempt up to that level since the correction started so far has failed. So to me, yeah, the NASDAQ 100 or QQQ is up about 1.8% today, but technically the significance is next to zero because that's what the pattern has been lately, bounce around within the range. So until we get something, solidly above or below that boxed in range that I just showed you, it's all just noise within the range. And same thing for QQQ. You can see that 280.32 level, the upper line I recently had about 282 because we had a couple spikes above there on QQQ. You can see right there. And so we'll call that a resistance zone, or the top of the range, that level. And again, that's the resistance zone, but this is the recent trading range boxed in with QQQ right there that I just showed you on NQ. So that's it. It's been a watch, rinse, repeat type thing since we've been in that range, and Qs need to power on through here for the bullish case to see the next tradable trend go in that direction, or break down below for the next tradable trend in that direction. And as of now, I'm leaning that way. But again, convictions aren't so high. We've been trading around, slopping around. We still are coming off that big divergent low from back here. And, go either way. So let's not try to read too much into it. Either actively trade, swing in the top and bottoms of the ranges, or wait if you're a patient investor and not an active trader. Wait to see which way this thing. RTY also up about, this is a small cap ETF, a little less than 2% on a snapback rally today. And again, the technicals indicate more downside, and that's still what I favor right there. You had this divergent high recently put in. You had a sharp leg down yesterday, and what seems to be a snapback rally today. And again, this is the new norm in recent months. Volatility has expanded, so you're going to see these 2% plus daily swings. And unless you get a technically significant move, I try not to make too much about it. Now, I will say this on the NASDAQ, or I'm sorry, the Russell 2000, the small cap futures right here. We did pop that level yesterday, and it was a false breakout. Now we're back above it, so it's very whippy. I try not to make too much of that. You don't want to ideally see that if you shorted yesterday, or you shorted on the bounce back to 1592, which was, and I still maintain an objective short entry. As I said yesterday, ideally stops above those recent highs for those of you short. And if you took the breakout and you're long, then I would look at this recent reaction low as an objective level to have a stop, because if we fall back through there, it's going to be another failure of that resistance level, defined by these recent reaction highs. And then, of course, we take out that reaction low, that's going to be bearish. So still leaning that way, but it's chop city until, and especially while QQQ is in that trading range, you're really probably not going to pick a strong direction or get a big down move or a big up move in the small caps until big tech decides which way it wants to go. And then looking at the Russell 2000 ETF, which is IWM, you can see we're right there. These were our previous highs right there, about 160. And then we also had a reaction high right here and some reactions there. So it's a resistance zone about 159 to 160, and we're still smack right in the middle there. So we're off that high right there. There's yesterday's reaction high. There's yesterday's reaction low. And so to me, when I look at this, we're clearly struggling with resistance. We had a sharp rejection off there yesterday. today. Nice snapback rally and sympathy with the other indexes so far today, but it's only brought us back to resistance. We haven't gotten back above there, so I'm still favoring more downside there, especially if and when this uptrend line right here and that 156.23 support level goes. That would be a nice buy signal, or sell signal, I should say, right there. And again, for you, those of you bullish looking for new highs, a stop somewhere just below those levels as well. That's intersecting support. In the bigger picture, as I mentioned yesterday, IWM is also at significant resistance here. This blue line right there on the daily time frame, which also that overbought conditions recently coming off a divergent high. Any equal or marginal new high, which effectively we have now, also extends those divergences right here, and so therefore favoring another move down back towards at least the bottom of that range. But if it goes the other way and the divergences are taken out, then that's going to be another breakout. And we've had a few of those in recent years as we've been in this trading range. I'll roll back there a little bit. And again, if you missed yesterday's video, this is the trading range I'm referring to. I tried to grab my box tool right here, right there. There it is. So we traded in there, traded in there, traded in here, with a few brief periods where we whipped outside that range and then back into or below it, right there. Something I just noted that I didn't mention yesterday, it's worth pointing out, those two whipsaws to the upside, meaning the breakouts that failed shortly afterwards, right here and here. Once those breakouts failed, and I say this very often, fewer things in trading and investing are more bearish than a failed bullish breakout. Likewise, fewer things are more bullish than a failed bearish setup. If you have a bearish technical pattern, breaks out but then it fails. So what had happened is when you broke down and fell back in the range, you didn't just go in, you did go in the range and you did bounce off the range, in this case twice, but then you relatively quickly overshot it. Again, that's a lot of bearish. What happens is, and again, my interpretation, this is part of technical analysis, trying to read on what's going on behind the scenes. Everybody gets bullish when a stock or securities at new all-time highs. Everybody's first of all, everybody's profitable. If you own a security, it breaks out to new all-time highs. Everybody holding it at that point, nobody's underwater. So nobody's regretful. Nobody's just dying to get out on the next big pop. What happens is you tend to blow out most or a lot of the shorts when you're at all-time highs, and bullishness is excessive. And you can say, some people say, when the last bull has bought his or her shares, there's nobody left to buy. And that's part of what happens there, especially once they realize the breakouts failed. And so that was quite bearish. And then here it is. We had another one there. That one, yeah, we went back. We did have a reaction off the initial tag of the bottom of the zone, but then never looked back. So just want to point that out, is that if we get a breakout, that has been the MO. If we get a breakout, and it can last, these last a couple months there. Watch if and when IWM fails, in other words, falls back below that 161-ish level. You want to watch out for that, because that could take us down too and back below the bottom of the range. Likewise, look at it both ways. Maybe this move here with the move down, but then back in. You can see perfect tag at the top, hit the bottom, back up. Maybe that's going to carry us back up through the top. Maybe that's the catalyst technically for the next bull market. So we'll see. You have to watch. Each breakout is different. These past two, were signal. We had divergences, and that's what I often say. Breakouts that occur on overbought conditions and negative divergences have a much, much, much higher rate of failing than breakouts that occur without extreme overbought conditions or divergences. Okay, quick update on gold. Gold continues to stair step lower. Remember, we had a divergent low. We'll go back to all the recent analysis, but just back here to this divergent low that was bullish, the catalyst for this rally, which ended with this rising wedge pattern and negative divergence. We broke down, kicked up, made a slightly marginal new high right there, and then this leg down recently, and that was telegraphed by these divergences. So near term, gold may continue to stair step. I don't have strong convictions right now. I'd rather watch. I think we're going to have more downside in the coming weeks, but it's been kind of erratic. And remember, we reversed a little shy of my 1844 target right there. Close enough you could say that it was hit, and there was actually a little spike reaction high when I'm putting the crosshairs here. But I think we probably continue on down there, and it meshes with what I'm seeing on the daily chart too. For a while there, I've been talking about all the way back here when gold hit long-term resistance and the euro hit support resistance, I should say. Right, the dollar hit support, euro hit resistance, and we've had this correction. So it's been, if nothing else, we're in a downtrend. You can't argue that. This has been the downtrend now for months here, since gold peaked back in about late July or so. And looking at this daily chart, this is a pretty big support zone right here. I have about call it about 180. We broke down here. We'll zoom in a little tighter. We broke down and we back tested. So and we're moving lower. And the back test, the rejection on the back test yesterday was pretty impulsive. See that big red candle? And so that could take gold down to about here. And I'm just watching if it gets down there. I'm still longer term bullish on gold, but intermediate term, let's say cautiously bearish. That would be one target. And then on the weekly chart, I've had a target also of this, at least coming down to this uptrend line right here. Let me make that clear. Sometimes I know the videos can be hard to make out with all these lines. There's the uptrend line right there. We're still a little bit above that. So that's one potential target. And if that goes, really nice support here. And I'd be very interested if we get down to that 160.80 level and the charts look good to maybe recycle back into some of my longer term positions in gold and silver and the mining stocks. And then silver, we had broken that trend line on gold earlier, but as I mentioned, you want to see the dollar, the euro, gold, and silver all break their trend lines. Well, silver finally broke down. Silver had the best defined trend line as well. It was a beautiful little bearish rising wedge, confirmed with negative divergences, and then boom, there was your breakdown recently, little kickback rally. Is that it for silver? Could be, but I think we'll probably get another leg down soon in silver. And we'll see where it goes. I'll look at the dollar and euro. I haven't really studied those today. I've been away from my desk most of today. Started out really good with the whole COVID thing, and kind of actually one of the best mornings and better nights in a while. But then it kind of set in again. So I have what they call now. I was looking. Somebody sent me an article. Long COVID, LONG, and they're gonna British healthcare workers are working on finalizing a term for that. That's people that go on for a month or up to, some cases document up for 6 months, but definitely trending in the right direction. So I'll continue to post updates, a little less than frequent than usual, and but I think I'm coming back online each and every day, little by little. All right, let's see here. The other things I wanted to talk about, a couple trade ideas. I threw out one the other day. Well, I threw out a few, and some were just setups, like the solar stocks. They're still on fire. Zero. Let me repeat, zero sell signals there. But I pointed out when that ship turns, that'll be interesting. The one that we did have a sell signal on the other day, I highlighted it here before the breakdown, is DKNG DraftKings, and so there's your sell signal breakdown yesterday. And it wasn't a gap down either. We broke down and then gradually moved down. Here it was throughout the day yesterday, and we're down again today. So this one, since the breakdown, is good for so far about roughly 11-12%, and we're still well above my first target there, about 47.40 or so, and that would be about a 21% drop if it gets there. Next target and a potential third target down there, 26.70. Some of the other gambling stocks, quite a bit, are holding up today. So I think this is the first to go. And once you start seeing some of the others go as well, that will, I think, certainly help. Oh, well, before I wrap up, one thing I wanted to cover is SPY. Here's SPY. Last update here, we had divergent high, little correction. And the level that I give comparable to the resistance we've been bouncing on QQQ is right here. That's about 342. That's a fib line there. Let me move that over there, get that out of the way. About 342 and change, because those are the same reaction highs that we had back in early September right there. QQQ had those, except QQQ tested them several times since, and SPY did test it once again. So it's capped all the advances in SPY, and if you look at the divergences, it's not as if that divergent high didn't play out for a pullback. It was a small divergent high, played out for a small correction, just like the bigger positive divergence so far. It's played out for a bigger rally. But what we do have now is I can simply extend the divergence lines like this. We made that new high right into that, or new recent high, into that 342.37-ish resistance, and you can see that the negative divergence remains intact for now. So resistance is resistance until and it's taken out. So let's see if SPY can pop that level and QQQ can pop the recent highs. Like I said, that's be hard to argue as anything but bullish until and unless it fails. And likewise, the recent lows in SPY, that would be the magic number there, about 331 and change. I think that's the number on the downside. If we get another leg down, that would do the trick. So watch for these divergences, watch for rejection there. If we do break up to the upside and keep running up, we'll probably just burn through these divergences. And then I had mentioned on the weekly chart, we have the potential for a bearish crossover on the PPO, but look at this. Today's the bounce over the last 2 days has really turned this thing up, and it was almost an imminent crossover when you look at SPY, but it didn't. When you look real closely, I think you can see it on the video. Looks like a duck's bill with a little head here and a little eye right here. So the lines are bouncing right now, and that's what I said the other day. We did have a cross at one point earlier in the week, and that was evidenced on the PPO histogram, but excuse me, my mic just slid down. Hopefully you could hear all that. As I said, we had a crossover early in the week. Remember, this was red when I was doing the video, but now it's green again because, again, this bar, everything on here is a weekly bar, so it'll change throughout the week. And so we're going to need to see SPY take another move down to get that bearish crossover. As of now, we don't have it, so there's one sell signal. And remember, the SPY is the broad market. Focus is on the tech stocks, tech heavy stocks, but this is the stock market if you're going to look at one index. And so that trend indicator right now remains on a buy signal. It's not a be all end all, but it is certainly something. If you want to make a case for another leg down, you're going to need to see this crossover for sure. All right, that's it. Let's wrap it up here. 17-minute video, not too long. That's about it. That's all I wanted to point out today. This has been Randy Finney with Right Side of the Chart. Have a great day.